Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and we're getting ready to do our weekly market update. We got a bunch of questions coming in the new year, and a bunch of people getting ready to buy and sell properties, which is great. Which is usually an indicator of what's going on in the larger market, which I'll get into here in a second. So I'm going to share my screen, share some good information with you here, and hopefully it helps. You can also get this usually in some bite-sized portion on our social media. So make sure you're following us on all our links that you can find probably in all these different posts or emails that you're seeing. YouTube, Instagram, and Facebook are usually the places you're going to find us, among others. So, all right, let's go ahead and share our screen. And here we go. I'm going to bring something over here first to show you. Just wanted to show some quick stats on what we're looking at. So we got 59 days closed on market. That's the average. These are all averages, of course. The 3.19 month supply. Now, a balanced market would probably be more around 4 to 5, up to 6 month supply. So we are still low on our supply. And the demand is growing, which I'll talk more about. Absorption rate is 31.33%, which is getting better. And then we've got the list price, what homes are listed for it, 786. And then the average sales price at 564. Now, it did show that year over year for the greater Phoenix area, we saw price increases on average 6.4%, which is amazing. Okay. Nothing like the crazy years we were in before with some of the other nutty sales that were going on. But certainly our typical historical average is right around about 4.5, 5%. Nationwide, you're looking at around the country historically around 2.5 to 3%. Phoenix is usually higher. We're doing great. So into the end of the year, things we're still going just fine. So the list to sales price ratio 97.72. That is, it sold at a price that was 3.38, 3.38 less than what it listed for. Usually that number for a healthy number is usually right around this or around 98% or just over 98%, but we're pretty close to that right now. And we'll talk about the trend in that. One thing I wanted to point out here, again, I'm not going to get too far into all the stats we could get into, but one of the big things to point out is we are at new active listings at 1452, which is, getting better. But nowhere near, and as demand is growing, nowhere near where we need to be. We'd like to see that number right around 2,400 per week for the greater Phoenix area. That's kind of normal for us. That's good and healthy. One other thing I want to note on this page is right in here. This is 40 billion. Now, this was actually up over 53 a couple weeks back, but when you look at these numbers, it's showing that there is more affordability for people, first time home buyers, to get into the market. The other thing I'd like to point out on pricing is, back in 2020, 2019, 2020, a property over $1 million, that was kind of our, $1 million on up. That was like our luxury market here in Phoenix. Now it would be 1.5 to 2 million would be our luxury market. I know I've been in the business now for a little over 10 years, actually going on over 11 years. And, used to be anything over 500,000 just a few years ago was the luxury market. I mean, back in 2015, 2016, 2017, maybe, anything over 500,000 with luxury market. So things have really changed here in the Phoenix area. And that's why a lot of people come here and invest properties. That's why a lot of businesses come here and whatnot, because it's a thriving place. So our economy is strong here. Let's take a look at what is going on. So U.S. home purchase applications increased the first week of 2024. What did I tell you was going to happen? That the searches and pre-approvals and those sorts of things, properties, searches, and, home loan pre-approval applications and offers on homes are going to start going up. We were seeing multiple offers at the end of last month during the holidays, guys. So, you know, it's been it'll be almost 2 years of this we're going into with this higher inflation, um, you know, high interest rate, situation where we came out of the crazy market and then things shifted. Usually it takes about 2 months for the shift to happen. I think we've hit rock bottom on the idea that the number of sales, our prices went up, but the number of sales was way down because of these higher interest rates and affordability. But we were up at 8. Now we're in the mid to high sixes, depending on the day for the retail average rate. Again, if you're working with a mortgage broker, it's going to be lower than that and cheaper to get your loan. So, we can certainly advise you and point you in the right direction there. But this is a great indicator. We're also seeing that lockbox openings, because that's tracked through digital tracking through our MLS system and our lockboxes. We're seeing that those numbers are increasing. So there's more foot traffic. So it's heading in the direction we told you it would. No surprise there. Lawrence Yun, who is the chief economist of the National Association of Realtors, points out consumer price inflation rose 3.4% in December, which is a bit higher than 3.4 in November, but longer term underlying trend is clear, with inflation being much calmer now compared to 2022. And I kind of even went into this a couple of weeks back, where we expect, people spend more money, get more credit, that creates more inflationary factors, along with all the money we're printing, to go out and put more money into the economy. So usually those months are when people, retail shops and all that are doing their biggest business and stuff. So I'm really not surprised there at the end of the year. We were ahead of the curve on that. Rates ended up, just yesterday down a little bit. So that's 6.78. Again, that's average retail 30-year fixed. When I say retail, there's mortgage brokers, wholesale market, where you're going to get better pricing. Okay. And again, these are just average numbers of what you're looking at on the retail side. So you can already get better than that now, as long as you have, even a little mid to high credit score. Okay. Or a good credit score. So we see the 10-year treasury is down. That's always a good indicator, because that tracks where we're going to be with these Fed fund rates, and then that has an indirect on mortgage rates. So that's a good trend. We want that to be going down. We also want that to be, matched up where it's about a two difference in about 2 points difference. Right now, we're not quite there yet, but a lot of that has to do with volatility with the Fed's fund rate, which we should see them start reducing that by March, and also some of the bank debacles that we had in 2023. Interest rate hopes send Fannie Mae index higher. Basically, this is just showing that, their consumer sentiment is going up, that, the housing market's going to get better. So that's a good indicator. Again, we like to look at all these data points, so we're not just, going with the, doom and gloom, sky is falling, everything's too expensive. And we've got some solutions here for you today for first-time home buyers. We've had some already, but we got more now that we're going to share with you. And also we'll share with you the Crawford Market Index, which is going to tell us exactly where we are in the greater Phoenix area as far as buyers and sellers, okay? And who has the advantage and what's happening there. But Redfin reports home buyers monthly payments dropped to the lowest level in nearly a year, bringing back some house hunters. So they're showing, as we talked about a couple of weeks ago, already kind of ahead of the curve, we're going to be seeing a savings of about $400 per month with the drop in interest rates that we had before, when we were at 8%, now in the mid to high sixes. You're saving around $400 a month. So guys, as they say, lock in that price on a home now and marry that home and date the rate. Now, if you can't afford to do anything right now, you just can't afford to do anything right now, and that's totally understandable. But if you can and you want to move on or you need to move on, now would be the time to do it and get those lower prices and also miss a lot of the competition. Okay, there's going to be a buying frenzy going on when these rates drop more. And we're heading into the busy season now with tax season and into the spring is when most of the transactions take place. Maybe a little bit early summer, but then it gets so hot here in Phoenix that people move on. So that's kind of our track. Unless you're looking at a retirement community, you get a little bit busier in the fall and winter, right? Okay, like now people are looking at that kind of stuff. So um here is another article here. Lawrence Yun said, the worst is behind us. Many experts say the worst of home sales is over. In other words, prices kept going up, appreciation kept going up, equity gains are there, but we had very low levels, like right around 2008 levels of actual number of unit sales. Okay. The number of sales, but not the prices. Okay. So we've just like the previous year at the end of the year, we hit rock bottom in what the shift was in prices in December of 2022, and prices began to go back up in January of 2023, but we had less in the way of transactions. We had, I think it was around 4 million transactions this year. I would expect to see much closer, if not over 5 million transactions in 2024. Okay. So that's really the biggest difference, guys. It doesn't have anything to do with, oh, it's going to be a bubble and a crash and all that nonsense that I've been hearing about since the last crash. And the silver wave that we've been hearing about, that's not really going to be a silver wave because people have, sell a property. They're also going to be buying a property. Yes, some people go into retirement homes, but most people are just downsizing. Okay. So, Lawrence Yun, chief economist, says, the worst is behind us. Another person here from Douglas Elliman, who's one of their chief people there, said it could be, uh, um, let's see, I think as soon as there's too much rate adjustment, we're going to see soaring prices. Okay. Rates go down more, the guys. Remember, for every 1%, it's about 5 million more people across the country that can now afford to go into the market and buy a home. So, you know, right now, if you were to, get that price that you can afford now, uh, taken care of, you can always refinance later. Okay. So I think right now, or she says a spot to go where you get a little bit more for your money. Remember, you can always refinance the rate. You can't change your purchase price. Okay. So, you know, one of the things that we always hear, when you're looking at, people who are successful or, in real estate and in business, they're not doing what everybody else is doing. They're not sitting back waiting, you know, like, for somebody in business, that things were a little bit slower this past year. They had to put a little bit more advertising in, a little bit more work, and be a little bit more creative. Same goes for the consumer, as far as investing in real estate, and in their lifestyle of owning a property, their own personal property. You have to, don't go with the herd. In other words, don't do what the herd is doing. Go big when others are going low. Okay, or short. Okay. Um, let's see. Again, if you can afford it. Okay, if you can afford it. Also, one other thing I want to throw out there before I forget. Now is tax season. If you are going to do a sale or a purchase this year at all, whether you're an investor or whatever, I don't care what it is. If you're going, especially if you're going to be getting a home loan, but just in general, I always like to say, talk. If you're getting a home loan, talk to your loan officer first before you file your taxes, because we run into these situations sometimes where, and I'm not telling you what to write off or anything, but sometimes people really want to do something this year and they're like, yeah, I write everything off. And then, you can't really justify that in a home loan pre-approval for the amount of income you make. So, in other words, you may not want to show as much in the way of write-offs or losses. Again, I'm not your tax person. I'm not your economist. I'm not your loan officer, but I would say talk to the loan officer before you file your taxes. Okay. And then kind of go from there. All right. That's all I'm saying. Okay. Um, Here is a biggie, guys, and you never want to buy any home, especially a brand new home. And everybody has their opinions on different builders. I can find good and bad reviews on all builders out there, all brokers out there, everything, right? But Lennar has launched a premier home specifically designed for first-time home buyers. So, in a nutshell, what this means is they're trying to help with the affordability factor. Obviously, they're doing it for business purposes, but they want to help. And then this has to do with them partnering, which includes mortgage lenders, trade partners, and realtors. By working together to find ways to cut costs to reduce expenses, Lennar is able to offer its new premier homes for sale for more than $100,000 less than the median home sale in Maricopa County. So when we look at medians, that's always going to be less than the averages. We showed you the average earlier. The median is going to be, much lower than that. I should have had that pulled up, but anyway, it's actually, let's see, median sales price for I've got the end of November 2023 was $439,900. Okay. So they're saying $100,000 less than that, which makes sense because they're saying that they're going to be offering properties. Let's see, they're going to be 3-bedroom, 2-bath homes, two-car garages from 1,250 to 1,400 square feet. And that's going to be pricing starting at the low 300s. Okay. Now, again, I know if we back up and we go back to 2018, 2019, pre-pandemic and all that, I'm going to be like, well, those were kind of high back then, but you got to figure things, prices on things kind of double about every 10 years or so. I know we kind of had an acceleration there for about a year or two on, because of inflation on home prices, but we are where we are now, right? And this is just another way to help people get into homes. Now, these are some of the areas they're currently going to be starting with around the valley here listed. So take a look at that. Again, reach out to us. Make sure you have a realtor that's experienced, with new home builds, especially to help you guide you through that process and make sure things are timely, make sure things are not hokey. You always want to make sure you still get your own inspections done and stuff like that. We can help you with all those sorts of things as you go along. You want to compare in-house lender compared to, the out lender, lenders on the outside and all that. So anyway, just thought that would be good for our first time home buyers out there, especially for stuff that's affordable, or maybe somebody who's even downsizing, may work good for them too. Okay. So the Cromford Market Index, anything below 90 on the index is a buyer's market. Anything above 110 is a seller's market. Right now we're at 112. I mean, just literally a few days ago we were at 110. So this is ticking up. We were in the low hundreds just a couple weeks ago. So we see supply has inched up a little bit, but it's still not where we need it to be, and the demand keeps ticking up slowly. Again, just last week this was in the 60s. A few days ago it was 70.1 on January 6th. So that is slowly but surely ticking up on the demand, and as people file their taxes, that they're going to need to file in order to show, income. And as they get closer to the time when kids get out of school and stuff like that, the seasonal thing, we're going to see that number go up. So, excuse me. Anyway, as far as the individual cities are concerned, we were at a point where most of the cities just a few weeks ago were on the downturn, and obviously during the holidays that happens because there's not as much going on. But now we see most of them are on the uptick as far as the Cromford Market Index is concerned for each city proper. And we look at 17 different cities, or Cromford does, and they are the gurus that are tied in with our MLS again. They give us this index. And as far as the cities go, So basically, this means we're in a seller's market now. A slight seller's market, but nevertheless, we're in a seller's market right now. Okay, and I'm expecting this number to definitely go up as those two kind of get further away from each other. If these numbers are the same, we're in a balanced market. Okay, if these numbers are the same, supply and demand is the game, right? For anything. So when we look at all the cities, we see the first 8 cities: Avondale, Mesa, Scottsdale, Phoenix, Glendale, Gilbert, Chandler, Fountain Hills. Those are all in sellers markets. So you got a little bit of advantage there for your seller. Tempe, it's 1 at 10.2, but it's actually trending down -3 right now on the index. So technically, I would say that's more in a balance. You've got Peoria at 103 and Goodyear at 100. Surprise at 95, but Surprise is actually trending up 14%, which is making huge gains. Fountain Hills is up 20% at 175.9. But Peoria, Goodyear, Surprise, and Paradise Valley, those are all in balance markets. And then advantage to the buyer: Cave Creek, Queen Creek, Buckeye, and Maricopa City. Those are all in buyers markets, and they're in a mixture of trending up or down. Okay. So that's really all I have right now, guys. I think that is some fantastic options for home buyers that are coming into the fray, or people who are downsizing, whatever the case may be. If you have any questions at all, want to get some more information for first time home buyers, get a free buyer consultation, or you're thinking about selling a property, we can do a free evaluation on the property and consultation on getting the property sold. Usually what we're able to do with most cases is right up front, we can bring offers. We even have a program called Knock where we can help people move today and sell later, have their old mortgage covered till that home sells, which shouldn't take very long in this market. And then, they just pay that money back through, basically it's like a bridge loan type thing. And you can even get money if you need to spruce your place up temporarily until you're able to pay it back out of the sale of your property. So we've got all kinds of things. You avoid all the showings that way and all that sort of thing without having to give up the farm with some of these iBuyers or low ball investment type deals out there. So, guys, if you have any other questions out there, we'd love to be able to help you out with that and go from there. So, please check out the links below. You can also have a really cool home evaluation tool that'll give you some good options on what you could do with your money and things like that. And you can always schedule an appointment with us anytime. We'd love to answer questions, even if you just have general questions to help you out. Thanks a lot, guys. We'll see you next week. Check out all of our shorter videos too on a lot of these subjects and stuff on social media, and we'll go from there.